what I'm also hearing about the security baskets, the return is not astronomical. So you're not going to get...
That's a great point.
Yeah.
Your goal is not returns. Your goal is protection. Yeah. What you're aiming for is protection. You want to make sure this money that I've left here, it is going to be available for me. That is your goal. And so if you make a return, it's a bonus. Of course, you want to maximize the return you can get, but within a certain level of safety. So your money market fund is fantastic for your security fund.
I get it.
So your emergency fund, money market fund works best. So now you look at, okay, what companies exist within the money market fund space and what are the returns they're giving, but then how big is their balance sheet? Now you look at what are the different factors I need to consider so that I ensure my money is safe and I can get it back as soon as possible and it's convenient for me to trade or transact with these people.
Okay.
Yeah.
Let's hear the next level.
So now that was the security level. So the next level is I want to beat inflation and I also want to make sure that even the markets, as they do this, like we saw with the stock market this year, I'm still okay. So there's an element of diversification, but then these are the assets that you would consider, okay? So treasury bonds fall under that. You have stocks or shares, and those stocks or shares can be from any country in the world. Then you have money market funds as well. And the reason I have money market funds there as well is because you must have liquidity. You always need money available to deploy because opportunities don't wait for you to be ready. So you also want to have some cash somewhere that is for flexibility. I'm thinking about where I'm going to invest. So you just keep putting money there so that when an opportunity arises, you can deploy. Let me give you an example. In Kenya, we have treasury bonds that are issued by the government. And they issue them usually about once a month. But sometimes most people want to invest in the infrastructure bond. A lot of times they want to invest in infrastructure bonds. But then they don't tell you, in October 2026, there's going to be an infrastructure bond. Usually it's the government has decided the next issue is an infrastructure bond. It opens tomorrow, it closes in 2 weeks.
Whoa.
And so if you don't have money, what happens? You know what I mean? Or you find there's an offer that has been given that has come and I don't have the money. So like, recently there was a Safaricom bond that was on offer.
Yep.
If you hadn't heard about it, you don't have 6 months to plan and save for it. So you kind of need to have savings ready to deploy. So,
but those savings are also not idle money.
No, it's not idle money. It's in the money market fund, earning some interest. Right now, the money market fund rates are about 8 to about 10.5% on average. So, at least it's earning something fairly good, and then you can deploy it when the opportunity arises. So I said stocks or real estate. So real estate, and the real estate has a whole host of asset classes within real estate. Like there's all kinds of real estate opportunities we can consider, from things like Airbnbs, renting, putting together containers, subdividing, putting up, shops. There's all sorts of things you could do within real estate, but it's within, of course, your ability, cash-wise, and your understanding.
Okay.
So real estate is another one.
Is liquidity a factor in this second bucket?
No, so the choice within the second bucket of which one you go for is liquidity, your time horizon, and your level of risk. Yeah. So, like now I've said all these different things. Even within shares themselves, the choice of which stock I'm going to go for will be determined by my level of risk. I might be like, no, I don't want to go for growth companies. I want to go for companies that are stable, that will give me a dividend. Yeah. So then you choose one that is stable, that I know even if it's not going to go up in price significantly, I know that at the end of the year, I'll have a dividend. Or every 6 months, within the year, I know they're going to issue a dividend, and that's all I care about. They're high dividend paying, and that's what I want.
Okay.
So between bonds, equities, real estate, what else did I tell you? Special funds, fixed income funds, equity funds, because you can go into mutual funds, global and local, they fall under here. Now, how much money do you have? How much time do you have with it? How much risk are you able and willing to take are factors that then come in. And so it's important to have conversations with people who understand.
I'm realizing this.
Yeah. You can't just say, oh, yeah, I need something that will give me, let me look at the one that has the highest return.
No.
Because there's certain nuances that you need to be aware of as you make a decision.
Can I just say
Sure.
this? This cannot simply be based on return.
No. Oh my gosh, return is not the first question. In fact, I find it interesting that usually people ask for details on return as the first thing.
What should we be asking? Things like the security. How stable,
Yeah.
how safe is this?
How safe?
Okay.
How safe is it? Okay. How much am I likely to earn? Is important. Of course, return is extremely important, but it's not the only thing. How soon can I get my money out if I need it? Because it will determine whether I can do it or not. So, for instance, I was talking about the treasury bonds within this basket. Now, a treasury bond is issued for a number of years. Okay, so currently there's one on issue. I think it's about 12.2 years to maturity. And then I have money and I need it in a year. And I have no business getting into that bond. It could be the safest thing ever. But from a time horizon perspective, there's a mismatch between my need and this opportunity. So I should not get into the bond.
I get it.
Yeah.
And again, as somebody who's dabbled in land, the return on land can be amazing.
It can be, yeah.
But the liquidity of land, I've realized, again, this is depending on where you're buying. But Kenyans love land, and I know a bunch of our clients are in that Kenyan bracket. So land is amazing. However, if it is for the liquidity basis, that should be something that you factor in.
Yeah. So land actually also, real estate is part of that basket as well. Land is great, but I think you need to have a strategy. As you're buying the land, you need to know, as you're going in, what's my plan with this land? Am I buying it to subdivide, sell? Am I buying to build on it? What's my plan? So that you don't get disappointed. Because it can take a year, 3 years to sell a piece of land. So that then it's not where you're going to get money for an emergency when things happen.
Okay.
Yeah.
You're not looking at it as, again, I like the way you've really categorized them. Okay, the third one. So are we done with the second one?
Yeah, so I think I've given you quite a number of examples. So we're done with that one. And by the way, these are just examples. It doesn't mean that everyone should be looking at investing in all these different things. It's just these are the categories that, I mean, they all fall within that sort of category. The last one is your, I call it the aspirational basket. It's your dream. It's where you want to put money away that can give you an ability to generate good returns. So here, return is important. Okay. And risk is high. Now, the kind of examples would be things like crypto, things like currency trading, private equity.
Currency trading is high risk.
Very high risk. 80% of individuals who trade in currency trading make losses. Yeah, it's high risk. It's high risk. Currency trading, crypto, I talked about private equity, venture capital. So that's investing in other people's businesses. So Richie starts a business. He needs some capital. He comes to a friend and says, you just, please, I need to invest in my business. High risk, high risk. I'm selling shirts. I'm going to Turkey. So you give me chums, I go to Turkey. I'll pay you back in 3 months when I sell my t-shirts or my shirts. Yeah, high risk, high risk. But potentially very good returns. You could double your money in a year as an investor in that sort of thing.
Could.
You could also lose it.
I've not heard you mention betting in this.
Oh, betting is not an investment. It is nowhere near this. Excuse me. I am insulted. Betting. And you know, it's a crisis in Kenya, but it is
Rina,
not
I saw
an
the
investment.
amount that is bet a day, or is
It's
it?
insane. It's so sad.
It's in the, I mean, yearly it's in the billions.
Yeah. So the problem with betting, it's win or lose, eh? And then with betting, it's patapotea. You have no idea. There's no strategy. Okay, they say there's strategies, but the house always wins. So whatever strategy you can come up with, the house always wins. And there's algorithms. They know who you are. They know when you came last. They can make you win a little so that then you put in more and then they make you lose. Anyway, let me not go into that rabbit hole. Betting is not one of them.
Okay. So betting doesn't fall under your investment category?
No.
I know this may sound we're having fun saying this, but there are people who think betting is investment, and that's why I've brought it up.
Well, it is not.
Okay.
It is not, and I would highly recommend for those of you who are betting, please just start putting money aside in these boring things I'm talking about right now. You'll be happier for it later. Yeah. I've never met somebody who said, oh, my wealth is from betting. Oh my gosh. You show me one.
There are two. There are those guys who won
I don't know
296 million.
He's one in how many?
In hundreds of millions.
50 million Kenyans?
Yes.
No, maybe now just 2 in 50 million.
Yeah.
It's not, and how many have made losses and what amounts?
Yeah.
Yeah, so no.
Okay.
No.
So but there are high risk investments. When you say it's a high risk investment, what does that mean?
It means that I could lose my money, and a good chunk of my money.
Okay.
I could lose everything or I could lose some, but a good chunk of it.
Okay.
With these others, yes, they could potentially still be losses. So I could have my money in a bank account, for example, in a call account, my security basket, but the bank could go under. But what are the chances of that happening, right? Yeah. So the risk level, you'll notice as you go up the pyramid, the risk level increases. Yeah, and so does the return level, hopefully. Now, when you start using leverage, so borrowing money to invest, that also increases risk, and that takes you now to the top. So, for example, if you go for CFDs, CFDs are contracts for difference. Yeah, that's very high risk because you're using leverage. If I borrow to buy shares, now that moves your stocks investment from here to there. If you borrow a huge chunk of money, a huge percentage of your investment in real estate, for example, that takes you from here to here. So leverage changes things.
Okay. Because you're borrowing.
Because you're borrowing.
Okay.
Yeah, because you're borrowing. But yeah, so I think that's in a nutshell. So where do you begin? So back to your question in the beginning. You have to think through, what am I doing? What am I covered? So you don't have to have every basket covered before you move to the next one. That's not what I'm saying. But you need to have an emergency fund, at least. You need to have an emergency fund, and the level or amount in your emergency fund will depend on your personal circumstances. So I can't prescribe it's 100,000 or it's $1 million. It'll depend.
Yep.
You know, some of us are single, you just need 100K and you're good. Others have 5 children and are single parenting and you need a bit more. So it just depends. So once you've got your emergency fund in place, then you can start investing in things like shares or things like special funds and things like bonds and other things. But you need to have an emergency fund. You need to have healthcare covered. You need to have health insurance, and you need an emergency fund.
What's though the mentality of, Yani, I'm going to take this money, I'm going to give it to the health insurance company, but I'm not going to get sick. Angalau hiyo pesa, that money, if I had taken it and put it in shares, even if I got sick, I would have just... I'm trying to change our psyche, because I've realized there's a psyche we have, myself included, when we think about investment, because for majority of us, nobody has sat down, talked to us, and walked this journey with us.